Welcome to part one of the second presentation in the New England Business Group's Pre-Startup series. This session will introduce key business considerations, while the entire 7-presentation series will help you evaluate your business opportunities and reach a go, no-go decision. I am Larry Gable, President and CEO of the New England Business Group, and I will be your presenter today. Even when your startup is a one-person show, you will soon find that you are out of control unless you start organizing and writing down how and when key activities need to be accomplished. Like it or not, you are now entering the dreaded realm of formal business processes. The right question is, what is the minimum that I need? Creating a new business is a process. It is a process that goes well beyond the insightful flash that hits you as a great business idea. However, there is no magic 10-step program that will guarantee you a successful business. The process is highly stochastic, that is, not all businesses will make it. And it's iterative, which means based upon what you learn as you proceed, you will likely have to modify your thinking and repeat parts of earlier steps. The New England Business Group has crafted a pre-startup process to help the entrepreneur organize thoughts and prioritize activities in order to optimize idea development and research processes leading to the go, no-go decision based on business and financial knowledge and market research. The result is an informed decision process that is geared to the realities of the marketplace. The net effect for the entrepreneur is to have acquired an enhanced information set upon which to build a business plan. The work and effort invested in business research and analysis is not wasted, but rather immediately useful in the development of the business plan. The Business Basics module is the second of 7 modules. It is designed to provide a foundation for acquiring the necessary background information and knowledge to evaluate the feasibility of moving from idea to business. This session is part 1 of a 2-part presentation process. You have to learn the rules of the game, and then you have to play better than anyone else. A quote from Albert Einstein. First, let's look at a few startup myths. Startup myth number 1. All I need is a good idea to be a successful entrepreneur. Well, the reality is a good idea is a great start, but it takes hard work, research, planning, plus successful implementation strategies to turn your idea into a profitable business. Startup myth number 2. If you go out on your own, you won't have to work as hard or put in such long hours. Well, the reality is that you'll probably work harder and longer, but you will enjoy it more. Exhaustion fades at the moment you proudly say, I did this. An entrepreneur carries a tremendous amount of responsibility, and you can expect to work around the clock the first year, maybe 2. And remember that you will no longer have paid vacations or sick leave. If you get the flu and don't have measures in place to keep your business running, it can have a financial impact. Yes, it's difficult work, but the rewards can outweigh the sacrifices that you'll make. Startup myth number 3. You'll be able to deduct everything so you don't have to pay taxes. Oh, really? The reality is taxes are based on net income, which can be lowered by subtracting expenses related to the business from gross income. Strict regulations apply, so you need to keep good records and learn how to make the tax system work for you. So there are many benefits to owning your own business, and there will be tax write-offs. But it's important to keep records, as I stated, and a separate business bank account. It is also wise to work with an accountant who can help you maximize your tax advantages. Startup myth number 4. If you work independently, you won't have to report to a boss. Wow, well, the reality is that you don't have a single boss any longer. You may have many. These are your clients and customers, each of whom have specific needs and demands. Your challenge is to keep them all happy. So there's the old saying, the customer pays our bills. and this is never more true than when you work for yourself. While you may not have one boss handing down the orders, you will have to answer to your customers. And keep in mind that you will also be accountable to the government, that is local, state, and federal, plus investors, suppliers, vendors, and creditors. The reality is that you will have many bosses. Startup myth number 5. Business owners get to do the work they want to do and only what they find interesting. Well, the reality is, think again, you'll have to wear many hats and juggle many skills, some of which may be downright boring, and many will be downright challenging. So most entrepreneurs, especially those in the early years, will tell you that there's more work than glamour in their daily lives. Because you will wear so many hats, you'll ultimately carry the bulk of the responsibility. And depending on your budget and how much help you can afford, you may have a wide variety of responsibilities: taking out the trash, negotiating with vendors, managing employee issues, dealing with insurance, cleaning the bathrooms, shipping orders, handling emergencies, and the list goes on and on. Startup myth number 6. If you choose to be self-employed, you'll be limited in what you can achieve since you'll be working alone. Well, the reality is that starting your own business actually unlocks all kinds of possibilities for your future. You take control of your own destiny because you decide how hard you want to work and which paths you choose and how successful you want to be. So the limitations are created mostly in the space between your ears. Be realistic, but don't trap yourself with self-imposed limitations. You can make a difference. So let's look at some business survival realities. After 2 years, the U.S. Department of Congress statistics tell us that about 30% of businesses started have failed. After 4 years, a full third have failed. But after 5 years, almost half have failed. So what are some of the critical success factors? Keeping in mind the business failure rates, let's look at some of the success factors that will help us be successful. First is adequate capital. That's a big one. A lot of viable businesses can fail simply because they have inadequate capital from the start. It takes a strong work ethic, effective time management, and education and experience in the field is almost a must. You need to have the ability to manage and multitask. There are a lot of things that need to be done, and they need to be done simultaneously. And you need a good choice of time and location. Plus, a willingness to ask for input from others. Seeking help is a good thing to do if you don't have the answers. So let's look at some business opportunities, some different options for starting or purchasing a business that you understand that you have choices. First is starting a new business. Some of the advantages are that you're not hampered by previous image or technologies. You can choose location, name, logo, relationships. You can explore new markets and directions, and you can see your dreams come true. The disadvantages are also there, however, and that is that there is no customer base. You have to build it all new, and that involves much greater risk and also no track record, which will lead to some difficulty in financing. So you could see your dreams become a nightmare. So then there's buying a business. Get professional advice when considering the purchase of a business. Records need to be reviewed by an attorney and an accountant. You will want to work with an experienced business broker who can help you navigate the many processes involved. So what are some of the advantages? Well, you have established clientele, suppliers, location. It's a known quantity with a proven formula for success. And they will help in starting, that is, they will help you in starting and running your business. And there are records to review so that you can see what the history of the organization has been. Plus, it's easier to obtain financing. Some of the disadvantages include potential hidden issues such as debts or poor reputation, loyalty to the owner, out-of-date inventory or transfer issues, and there is no guarantee that success will continue. The next is buying a franchise. Well, first, a franchise is a right granted to an individual or group to market a company's goods or services within a certain territory or location. There can be more advantages than disadvantages to operating a franchise since it is like buying a business in a box. However, profitability varies widely with franchises. Some locations may net just $40,000 a year after expenses, while others may net well into six figures. And just because a sandwich shop does well in one town, there is no guarantee of equal success in another town. Some popular franchises are the UPS store, Domino's Pizza, and of course, McDonald's. So the advantages include it's a proven product, it has marketing and sales power, you can actually get it, become successful with relatively limited experience because the franchisor will provide training and professional guidance and continued consulting as you move through the relationship. Plus, you have access to other franchisees for help. What are some of the disadvantages? Well, you do lose some control. You're not always your own boss. Then the franchise will normally ask for royalty or other fees, and there are operational boundaries that limit your choices. And remember too that a franchise is a binding contract. Also, if the franchisor has problems, they become your problems. All right, now we want to briefly discuss home-based businesses. It's a really good idea to set up an office in the home, not only to minimize distractions, but to justify the business write-offs with the IRS. Some people struggle with feeling lonely when working at home. You can make up for this by getting involved in your local community, attending Chamber of Commerce mixers, volunteering, etc. So some of the advantages include convenient work location, less expensive, you can have a very flexible schedule, and there are tax advantages based upon the square footage of your home versus your office. Some of the disadvantages include some zoning or deed restrictions may in fact impact what you can do from your home office. And then there is the isolation from others that some people have to deal with. It can also be difficult financing a home-based business, and of course, being at home, there can be family distractions. And last but not least is the IRS scrutiny that goes along with the home-based business. So make sure you have very good records and understand exactly how business is conducted in your home. Then there are nonprofits. Some of the advantages of organizing a nonprofit is that there are no shareholders or owners. The nonprofit, under certain circumstances, can apply to the IRS for 501c3 status, that is, allows personal deductions of charitable contributions. It's also, under certain circumstances, able to apply for state sales tax exemptions, and it operates with a minimum of a 3-person board. The nonprofit can pay salaries to employees and consulting fees for work done in its behalf, and it may qualify, under certain circumstances, for government or foundation grants for specific purposes, such as developing workshop series for small business development. Generally, this requires nonprofit corporation to also qualify as 501c3 organization. And it can operate much like a for-profit corporation with a board of directors, officers, and staff. As with a for-profit corporation, directors and employees are not liable for the acts of the nonprofit organization. So let's look at some of the disadvantages. Well, first, corporate profits cannot be distributed to shareholders or high-level managers. All profits remain within the organization as there are no owners of the corporation. Secondly, the nonprofit corporations are not entitled to 501c3 status or sales tax exemptions. they must qualify and apply for such status both at the federal and state level. And creating and seeking the 501c3 status and state tax exempt status is complicated and requires assistance from an attorney well versed in this area of law. Nonprofit corporations are generally operated for educational or charitable purposes and cannot profit those who created the organization through either distributions or sale of the business or its assets. Nonprofit organizations often, but not always, rely heavily on donations, long-term contributions, and grants in order to remain in operation. Few are able to operate at a profit without public and private support. Examples of significant nonprofit corporations are the Boy Scouts of America and the American Red Cross. Let's look at some online businesses. Three basic types. There's advertising-based business models that attract visitors to their sites and then sell advertising to companies who wish to reach those visitors. Yahoo.com is a good example. Then there's retail sites. That is, you go online to a storefront where people can buy things. Amazon.com is an example. And then there's the forum-based businesses. eBay is an example. Instead of selling products like Amazon or selling advertising like Yahoo, eBay simply acts as a forum or a place for people to interact. In this case, it means buying and selling goods to each other. The members of eBay are the ones who actually sell or purchase items, and eBay simply takes a share of each sale. So the advantages, basically, you have a low-cost startup condition, you have expanded geographic reach based on the internet, and it can be very convenient and accessible as well as flexible. Some of the disadvantages include low conversion rates. It may take a lot of hits on a website to actually get a sale. And then there are low barriers to entry, and that means there's a lot of potential competition. And then there are visitor expectations. Visitors come with expectations that you may not be able to manage because you can't see them and don't know them. And then there is the no personal contact, so you get limited sensory information along with a sale or a hit on your website. So let's look at the entrepreneurial journey overall. Let's look at some of the characteristics. You need to be a self-starter, resourceful and responsible, highly organized and willing to work hard, and you must be persistent and decisive. Now, all that requires a fairly healthy individual because there is a lot to do and you have to be there and ready to do it. And last but not least, you need to have a supportive family because it will take a lot of time and they have to be very understanding. So, how many hats? How many hats? Many, many in a business. So how many will you wear? These are the typical departments and functions involved in most businesses. Will you take on all of these roles? Do you have weaknesses in any of these areas? For example, are you comfortable working with numbers? Perhaps you should hire a bookkeeper or take a class to improve your skills. How do you envision your organizational chart now and in the future? Which roles will you hire out and in what order of priority? How many of you are comfortable in a sales role? Do you have some concerns about how you will handle sales in your business? How comfortable are you hiring, firing, and managing employees? This is another important function involved in growing your business. And there's marketing. Marketing basically is the strategy used to create the desire to purchase, and it also creates the company image. Anything that you do to get and keep a customer is considered marketing. Your product or service will not sell itself. So marketing is essential to bringing in customers. It can include a variety of functions: internet campaigns, email marketing, direct mail, word of mouth, business networking, paid advertising, trade show booths, and much, much more. What's most important is that you identify multiple strategies that you can use to bring customers into your business. Then there is sales. Selling focuses on the needs of the seller to convert product to cash, while marketing focuses on the needs of the buyer and the need to satisfy the customer through the products produced. Many entrepreneurs are resistant to selling, especially if they've never done it before. But when you own a business, you have no choice but to put on the salesperson hat. And you can see there is a cycle. Yeah? Customer contact work, you find prospects, you make presentations, prepare bids, close deals, process orders, and start all over again. So there's definitely a cycle, and it is a necessary cycle to the success of the organization. Then there's your product or service. Think about the functionality and packaging of your product or service. Consider the quality. Who needs it? Why do they need it? How is it different and better than the competition? Product position, location, location, location. Location is critical when it comes to your product or service. You need to consider what kind of market you'll be selling into, your competition, the distribution and merchandising of your product, how you will produce and deliver your product or services. Merchandising is the activity of promoting the sale of goods at retail. Merchandising activities may include display techniques, free samples, on-the-spot demonstration, pricing, shelf talkers, special offers, and other point-of-sale methods. According to the American Marketing Association, merchandising encompasses the planning involved in marketing the right merchandise or service at the right place, at the right time, in the right quantities, and at the right price. Next, product branding. Building brand recognition. That's what you want your business to be known for. Do you want to be the low price leader, the company with the fastest service? Which colors and images portray your messages? Where will you be advertising your business? Different publications target different audiences. These are important considerations when designing your business identity, logos, website, etc. And then there's product price. Your price is the strongest signal to the customer as to the product's perceived value and position in the market. Customer sets the price, that is, shows what the market will bear. A higher price will equal higher expectations, and vice versa. A low price might lead to loss of perceived value. Avoid price wars. Figure out how sensitive your customers are to the prices. Bundle prices together to create more value. Credit terms can also make your product more attractive. So don't churn and lose money. Look at the value chain. Look at the value chain. Create a sales force through reward system. And then there is the competition. Understanding your competitors helps you position your business. Study at least 3 competing businesses. Figure out where your prices fit, what guarantees they offer, and what advantages and disadvantages they have. Herbert Hoover, 31st President of the U.S., said, "Competition is not only the basis of protection to the consumer, but it is the incentive to progress." In summary, we talked a little bit about the myths of starting a business and looked at a set of business opportunities and did a very quick run-through of some of the capabilities that you will need and some of the things you'll have to do to run your own business. So, from our studio audience, actually, I have a question. The question is, which tends to produce the highest percentage gross profit, mature high-volume products or new low-volume specialized products? And I would say the answer to that is the new low-volume specialized products. Mature products tend to be more competitive, which compresses pricing and margins. Mature products also have to be priced competitively to enable volume distribution and to resist threats from newer solutions. High volume production requires competitive pricing in order to maintain the volumes necessary to support the related large-scale investments. Additionally, customers and buyers are more informed and price-sensitive in mature markets. We have completed Part 1 of Step 2 of the 7-step process. These are the main topics of the next 5 sessions. Note that this series can be used for one or multiple ideas. Please be with us for our next session, Startup Basics Part 2, where we will answer the question, how should I organize my business?